Hi guys, welcome to another trading brief with me. Before we start guys, just let me know that you can hear me okay and that you can see the correct screen. I hope that you like this kind of videos just because first of all, after that small survey that I sent a few days ago, most of you say that you love this kind of a session, so we decide better to say, I'm deciding that we are going to start doing these small sessions every single day starting from Monday. So every single day at 1 p.m. GMT time, like this time, we are going to do a quick sessions just to make everything more interesting. Okay, now let's check up the news real quick. Definitely, we have a decent amount of, better to say, interest rates this week. We have Bank of Canada interest rate coming today, like in 1 or 2 hours. After it, we have the US rates. Definitely can be interesting. Like for the Canada, I really don't expect any change there. Definitely want to see the policy, but from the US at the moment, you don't know what you can expect. And just because of that, like everything is possible. After that, we have what? We have inflation data coming from the Europe tomorrow, and also interest rates from Bank of Japan. I think Friday is going to be a high, yeah. First Friday, so non-farm payroll, definitely. That's the only thing worth watching on Friday. But definitely we can expect to see a decent amount of the news coming in the next few days. Now, if we take a look at the US dollar, like always, we can see that we are moving higher. We took this high, last week's high. So more than a good chance that we are heading higher. What we said the last time that this is looking like a potential head and shoulders. I really still go with that idea that this is a head and shoulders that should be a sign for us telling us, okay, we are down with that bearish momentum from the last year and that we are finally ready to push higher. That's why I'm labeling this wave 5 as a complete. The only thing I'm thinking and considering changing here maybe would be this wave 4. You can always fit the wave 4 here and call it some sort of a running flat. Definitely count looks better this way, and if you're right, this is just a 1, 2, and we are in the wave 3 right now. So we want to see definitely the rates, but at the end of the day, we should be more bullish at the moment. Now, the take of this move would reveal that 99.39 would definitely be that final confirmation that for us to tell us, okay, we are ready to continue to move higher. But the more I'm looking the charts, the more I'm feeling that idea that it's time to give up of that downwards momentum. Now, we made a lot of profit on the downside and that was fine, but it's time to start changing the view and start focusing on the upside. So buying the pullback is not a bad idea. Short-term invalidation right now can be this 97.11, just because if we are going with the idea that this is 1, 2, and that we are in the wave 3, we know that we should not see the break below this level. So we can use it as our invalidation point and just go for a more bullish momentum. We just go and use that equal X. So 99.68, the first resistance to focus, but the more I want to see 101 and higher levels. So 101 definitely the target next. Europe, the same story. We said the last time that we had a 3-leg move, but if this continue, there is more than a good chance that we are going to take this, and definitely this still look like a 3-leg move, but on the larger scale. For now, more bearish, we can expect to see some sort of a pullback, just because on a smaller time frame we are ending some sort of a 5 leg, so definitely some sort of a pullback, but more bearish than bullish. The pound, you know guys that we hold it, that bearish count worked pretty good. We done that 5th leg, we cracked the low, so now we have that complete 1, 2, 3, 4, and 5. And now we can start focusing on that upside and looking for the short positions. For invalidation, for this view, definitely this high at 137.89 would be that good place for you guys to place your invalidation point and focus on any pullback. What we said, that after a leading diagonal, like in this case, we want to expect, or better to say, we want to aim for a deeper pullbacks, and 618, 78.6. So definitely this area over here should be the next area to target, and that would be probably the best area to try to focus on a short side of the market. Short term, definitely you can look for a long place on a smaller time frames. Just keep in mind that this structure is bearish, and the better side would be a bearish side. Now, Aussie didn't do much, continued to move lower. I don't like it anymore, really. I like it here. That breakout was perfect play, but after the pullback, we are also seeing a 5-leg move. So I'm counting this as some sort of flat correction, because at the end of the day, it's really all this market has been doing. So not that keen anymore. Like, we are most probably going to move lower, that's fine, but I don't see here a potential for any place. Like, I don't see a potential for a sell here at the moment. I don't see it for a buy. It's too choppy again, so why waste our time here? Dollar CAD moved. We are not looking at this as a triangle just because at the end of the day we broke the triangle, but this is still just the A, B, and C, nothing more. Like a simple A, B, and C. When I say simple, it's not probably that simple, but if you look at this, this is a nice clean move, pull back, and how this looks like a potential diagonal in the wave C. So we can still focus our attention, at least short term, on the upside. Nothing special. Like, I would use that larger trend line as a potential resistance, maybe even a test of 138.63 before we see a push lower. So short term, probably bullish is the best option, but I want to see what's going to happen after we finish this part. Like, if market wants to go for that final push down, the equal X come where? Here, 138.15. So from there, I want to see what's market going to do. Pullback play, still the equal X makes sense, but only as a day trade. And of course, if you're right and this is some sort of ending diagonal in the wave C, we are going to see a pullback and then a one more push higher. And that's why I'm saying it's worth a try, because there's still room to see a more bullish momentum here. Dollar yen, similar scenario, to be honest. Like, we are making more higher highs. We didn't make the new higher high this week, but at the end of the day, it's looking ugly bullish. We are still focusing on that equal X, so 150.82 is definitely the next resistance area to focus on. If opportunity present, I see this as a potential buy, that's fine. Nothing crazy, just because you get that flag breakout. So we know that we should hold about 145.88 if we want the dollar yen to continue to move higher. And if we get a decent pullback and we can create a good enough risk reward for us, definitely this can be a decent opportunity. If we don't see, or like if we just see a strong spike up, then we will miss it. But if we see a decent pullback and a 3-leg move, why not? Like if we can create a decent opportunity for us, why not try to take it? Euro yen, on the other hand, like we said the last time, is not interesting anymore. We done that move higher. We done what we wanted. From the high, this move look how? Strong, look motive. So definitely I'm still going to slightly adjust the count, but we are still tracking this towards the upside. But for me to be a buyer here, I want to see this. I want to see a 3-leg move and then look for the long. Ideally, 23.6 will hold. We know that 23.6 to 38.2 of the wave 3 is that ideal area where wave 4 should end. So let's see, like, if market find a support at 23.6, in that case, that first leg, in that case 38.2 will be that area of focus for us. Also, when you're looking at the market like this and you just draw a simple channel, what you can see is that that lower channel line have the more chance to act as a support and match that 38.2 more than 23.6. So why not? So short term, maybe even thinking of a potential sell can be a decent opportunity, but only as a day trade. Because we know that we should see at least 3-leg moves. So why not? If you get a decent pullback, you can use the highs at 170.89 as your invalidation point. Looking for 23.6, 38.2, that can work fine. And also can be a decent hedge for, let's say, dollar yen if opportunity presents itself. Gold, we didn't see much. Like, we are tracking this. I'm loving it because, technically speaking, for the last 3 weeks, we were right all the time. So why not? Like, it's moving. I'm still holding this as a potential end of the wave E. Of course, only a break above here would suggest that and give us that final confirmation that gold is ready to push higher. But for now, looking for a small place is not a bad option. Definitely, gold is one of the assets that can react today. And I'm saying the gold can react today more during the time of the Fed, of the raise, also on Friday when we have non-farm payroll. Also, there's a time when we can start to expect to see a strong movements in gold. So why not? Let's see how this work. Silver, on the other hand, continue to move lower. We have that 5-leg move, expecting a short-term recovery. Definitely this zone can be a decent resistance. So short term, I want to focus still here. If on some small time frame like 5 minutes, 15 minutes, I see the opportunity, I'll probably take even the long here. But I'm more going to focus in silver on trying to get into short. Like trying to get into short from here if market aligns and we see everything that we want, and that's just a pullback that have a decent correction that's not impulsive in nature, then that can be a decent chance. Because if we get the pullback, this will look like what? Like head and shoulders, so trying against the high will give us decent enough risk reward, and we can use even just this low at 37.48 as our short-term first target. After that, focus on that trend line as a potential support and lower levels, but I like it. Definitely, if I need to pick between, let's say, gold, I'm more bullish. Silver, I'm more bearish short term. Long time ago, I really believed that these two must work together. But in the recent years, definitely, they're still highly correlated. But gold is leading the way for a long time. So, of course, short term, I can have a different views on the two metals, and it's still fine. Crypto, definitely following the plan. I like it. Like we ended the wave 4, moved higher, made a pullback. How does this pullback look? This pullback look like A, B, and C. Of course, if you take this, then we are just looking for 7 legs. No, 3, 7, and then a push higher. But right now, how I would look at the crypto and the Bitcoin in general would be I want to see a breakout here. I want to see a breakout. Breakout should be that early confirmation that you should try some small position at least towards the highs. At least. So we can create good enough risk reward. Why not? We will see if it's going to happen, let's say, soon, let's say today, tomorrow, or is going to take a little bit more time, few more days, and we go for a 7 leg, so a complex correction, and then see a breakout. Whenever that happens, I want to be ready. I mean, I love TradingView just because I can create alert. And when I create alert, I don't need to be in front of my screen all day long, focusing on every single tick. Once we break this, I'll get notification on my phone. I'll know when I need to be there. But I love it. If you're looking at Ethereum, still nothing special. Like, it was perfect. I still think that we are going to see a great trading opportunity here, and that we are going to see a pullback before the trading opportunity appear. But the short term, if you're focusing on that smallest count, you can expect to see one more push higher here. But if I need to pick between Ethereum and Bitcoin at this moment, I would rather pick up Bitcoin. That's simple. Everything else is okay. So dollar index, more upside for euro. We want more downside. Of course, have a data that can change this, but short term, everything that will happen is only going to be a short term reaction. Nothing long term is expected. Just because all the rates that are coming this week should stay the same. Definitely, you never know what's going to happen with the rates when we are talking about US and the Trumpy, but at the end of the day, that's what makes trading at the moment so interesting, just because one tweet can really impact the market. But I still don't expect many major changes in our views for now. I hope you liked the session, guys. I'll see you all on Friday. And remember, guys, from Monday we are going to have a session every single day. so you'll always have the update on the counts. Have a great rest of your day.